Well, we've had a big reversal today. The day started off very, very weak, but we've had about a 100-point reversal in the ES, about a 500-point reversal in the NQ. The YM is green, the ES is green. The NQ had been getting slower, now it's down just a little bit. So big reversal, and that is cool. If I may say so, this is the kind of market I love, which is measured, steady, calm, just kind of inching its way lower. Nothing dramatic, no crashes, no need for a big government bailout or anything like that. I did lighten up a little earlier today, but I'm in it for the long haul. These options expire typically between September and January that I got. And yeah, so far so good. And the big event this week is going to be Friday morning, the jobs report. And we will see how the economy's doing, how weak or strong that jobs report is. This Wednesday is, I guess, unless they've changed plans, Liberation Day, when all the tariffs kick in. And unlike last week, when they backpedaled and said, oh, the tariffs will be narrow and focused, et cetera, they didn't say anything like that. The reaction over the weekend was like, hey, car price is going to go up. I don't care. So it just seemed to be like, go with the flow. And that insouciance about the tariffs seemed to compel the market to sink pretty badly. But as I said, it has shrugged it off. And I'm not kidding you. I really prefer this kind of market to one that just barfs every day. This is a lot more manageable. And the really cool part is that unlike a situation of lifetime highs, where it's like, who knows what's next, everything's sort of hammered out now. You can use Fibonacci's, you can use support and resistance, you can observe overhead supply. Charting just works a lot better when you're kind of in the thick of it, as opposed to just floating out where no man has gone before. So let's jump in and catch up on this interesting day. So here's the spider. Very cool bottom here. We basically matched the kinds of levels that we saw at the depths of March 13. It is zero surprise that we're rallying right now. In fact, over the weekend, as I was looking at some of the longer term charts, it was pretty clear that March lows would probably represent support. XLI, one of the industrial ETFs, this has a very nice topping pattern, but although we kind of teased around with the same kind of lows where we've cut losses substantially on that. I haven't looked, hardly matters what the news was about, like, why is the market going up? It was going down earlier. It's all just, look at last week. A week ago today, the market was up massively. How much did it matter by the week's end? Zero. All it matters is that people who overpaid for their stuff and had to take big losses on them. So the narrow tariff shtick didn't mean a thing, except for that one day. Here's IWM, the small caps. Beautiful top on this. This was the peak of the retrace, and we were just plunging earlier. We actually got even lower than those lows we'd seen in March. We were kind of at the same levels. We're at the same levels we were back in late 2023. And if with a capital I, this is the head and shoulders, the classic measured move takes us way down here, which even I have trouble believing, but there it is. The cubes, tech is still weak. It's still red on the screen, although a lot less red than it used to be, and it cut way below the lows we'd seen earlier this month. And this is the last day, not just of the month, but the quarter. So there's probably some weirdness going on in terms of just calendar effects between now and the closing bell. Semiconductors, always the kind of go-to sector to look at. These continue to crumble away. The days of NVIDIA leading the market higher are way behind us. And we're getting closer and closer to what I suppose should represent massively important support here, because we had found support back in April 2024, again back in early August of last year. And I think this week will probably get there, maybe even exceed it. Within that, I was only reminded of server robotics because of thinking of NVIDIA. You may recall that Serve used to be just a very new stock, just doing wonderfully because of its support from NVIDIA. The fact NVIDIA had an investment stake in it, very public support of Serve was all it took. The moment NVIDIA said, nah, never mind, and dumped the stock, it's just been cratering. And so this has fallen from its peak here just earlier this year, over $24, down to about 1/5 that level. So this kind of shows the dependency of these smaller companies on a big supporter like NVIDIA. Here's AppLovin, down again hard. This had peaked, so it had fallen, retraced, and then has been falling ever since. And I dare say that this too will slip below the support represented here. And the next step in that instance would be pushing down to this gap, close that up. And the wonderful world of quantum computing also seems like that fad is behind us. Qubit, for example, Quantum Computing Inc., down about 4%. So a lot of shifts going on. I also noticed with the brokerages, here's Interactive Brokers, for example, IBKR, another great example of how helpful gaps can be. Here was the price gap here taking place, this big liftoff, probably earnings based, I would suspect, back in early November. And so we rocketed higher, peaked last month, and then down, and there we go, just about a perfect seal of that gap, and now we're starting to rally away from that. What else is going on? Finance. Bank of America. I lightened up on this some early today. It had a nice week opening, but I think that stocks like this are in pretty bad trouble. And I've got to emphasize again the importance of Friday morning's jobs report. If it comes in quite weak, that could be a real catalyst for a lot more selling. But this was, I think it was this is a lifetime high right there just last month. And we fell hard, bounced, fell hard, bounced, fell hard, and now bouncing yet again. But you can see that we're sort of channeling down on this. The bulls have kind of lost the narrative at this point, and the market's become kind of very defensive. And so on a day like this, the ES is up 32, the YM is up almost 500. It's all just dead cats bouncing, and what I perceive as brief countertrend rallies. Some individual items. Don't know how many of you watch Last Week Tonight with John Oliver. It's one of my favorite shows. It comes on Sunday nights, and they had kind of a takedown of Axon Enterprises, and that hit the stock to some degree. I actually I covered this short earlier today to take advantage of that. I suspect it'll have more downage to go. I don't think it'll be done until at least it seals this gap up. But even now, with this counter-trend rally, we're still down on Axon. Corning, also still down. This is behaving itself quite nicely. It's GLW. Finally, at long last, Royal Caribbean, kind of a nemesis of mine, has behaved itself. And I've got puts on this. Took some profits off the table, but for the first time in how long? First time in 2.5 years, almost 3 years, this channel's been broken. This channel's been in place since way back here, as you can see, and we've been meandering all through the channel, up and down, wiggling around that midline. And finally, today, it broke that. So that's pretty spiffy. So RCL doing nicely. The server companies in and around the Stargate project and AI, these have also continued to sell off. Here's Oracle below this failed level. Here's Dell down over 2%, like so. And so in these cases, I'm just, as I said on Friday, just kind of sneaking those stop loss levels lower to take into account whatever new gaps have taken place and to reduce risk. What else? Oh, here's a good one. Seagate, STX. This one, not down as much percentage wise, but a really pretty topping pattern. Just terrific. I would every bit as good as this one. And so we're slipping lower on that one nicely. Very well formed top in that pink zone. And our old burger flipping friend Wendy's, our diamond pattern here, up a little bit right now, but continue to move nicely over the long haul in the right direction. And there's the new stop loss there at 15.11. So, yeah, as I said, I mean, portfolio-wise, things looked a lot better early today than right now, but you kind of adjust along the way. So I took some profits, and I made a bit more of an emphasis on commodities, precious metals, and oil bearish positions. One straight up bullish item that continues to do great, one of the few items that we've persistently talked about is a good bullish chart, is Exelon, EXC, and it's up again to a lifetime high, 3.1% pop on that one. I mentioned precious metals, another record day for gold. The front month on gold up $35 about. I beg your pardon, $40.50 at the moment. And there's GLD itself blasting higher. It's just really all you need to know about the Fed's future. You can see in gold. Miners are also up percentage-wise, about 0.8%. I'm taking a stab at. I've got a smallish short position on GDX. I could get blown right out of that, but it's. I got precious metals. I've got to have 1 or 2 days of selling here. It's just unbelievable. Crude oil is rocketing again. It is just. I've got to believe geopolitical tensions, perhaps the threat about we're going to bomb Iran if they don't shape up. That probably doesn't do great things for oil prices for the bears, but crude oil is blasting higher, over 3%, and yeah, it's not much of a pattern here. I've kind of I've put this pink zone here. It's not a pattern. It's not a top. It's just kind of almost a placeholder because oil's been exceptionally strong. We've got about a minute left. Let's just wrap up with a few general items. The VIX was higher today. Now it's sinking, but I will say, and let's stretch this chart a little bit for better visibility, it has hammered out a pretty bullish pattern itself. And when I say bullish, I mean bullish for volatility. If this were a stock, this would look very appealing as a buy. So bullish for volatility does not mean bullish for the stock market in general. It's a nice looking pattern. The small caps, by way of this long-term continuous futures contract, the RTY, let me set that. This is also a very pretty picture. We've got a very well-defined top here. How high it'll go within the confines of this slip. We had this fall over the past 4 days. How high it'll push against that, I do not know. But clearly, the raise the white flag would happen if it actually got above last week's high. I do not think that's going to happen. I imagine that probably sometime tomorrow it'll poop out with the countertrend rally. And finally, on the NQ, longer term, as with the RCL, we've broken this channel. Shorter term, we fell very far, very fast, and poked below this month's lows. We've got a hammer right now. Wouldn't be at all surprised to see this continue to rally tomorrow, maybe get us up about halfway between those lines or thereabouts.